about now demand as far as the consumer durables space is concerned. Summer demand is of course, starting to pick up in certain categories. We've sort of got that feedback from companies like Blue Star, etc., that we have spoken with. We have Premchand Devarakonda, Chief Financial Officer at Electronics Mart India, and Bijou Kurien, Chairman of Retailers Association of India, to give us a sense of how things are looking. Gentlemen, good morning. Good to have both of you here. Premchand here. Mr. Premchand, if I can start with you, sir. Could you give us a sense of how, this quarter, Jan to March, is panning out like? I mean, you typically evaluate your business on a Jan to June basis to cut out seasonality. We are, of course, not there yet. We're just at the beginning rather than at the end. But how are things shaping up for you on the consumer durable side?
Good morning. First of all, thank you very much for having me on your show. After witnessing a little bit of disappointing third quarter, so this fourth quarter is quite promising, and we did see decent demand for the consumer durables in the fourth quarter of this year. And I think the trend is going to continue further till
Okay, I think Mr. Premchand, can you hear me, sir?
Yeah, now I can hear you. Yeah.
Okay, there was a bit of a scratchy line there. So could you put that in numbers, Mr. Premchand? 9-month same-store sales growth was about 3.8%. You said Q4 is looking very promising. Could you give us what Q4 may look like? I mean, you don't have to give a precise number since the quarter is still on. But 5% plus, what exactly are we looking at? And also, if you can provide us with some targets for same-store sales growth for next year, FY26, sir.
SSG, because about more than 65% of our top line is contributed from Hyderabad. So since the base is very high, expecting like a double-digit SSG from Hyderabad region is it's over-optimistic, but we are expecting mid-single-digit SSG coming from Hyderabad cluster. And in other clusters like Telangana and then Andhra Pradesh and North cluster, there we could see a double-digit SSG coming in from these three clusters.
This is for Q4?
Yeah.
So on a blended basis, on an overall basis, what are we looking at? If you can give us a sense.
Overall for the Q3, it will be on between 5 and 6%.
You mean Jan to March?
Yes, I'm talking about Jan to March.
Okay, and beyond that, I mean, is too early or you have some visibility? Will you be able to improve?
For the next year, at the company level, we are expecting mid-single-digit SSG because last year base was very high. That's the reason why it is going to be like mid-single-digit for the next year also.
All right, Mr. Premchand, got that. Stay with us. Let's get in Mr. Bijou Kurien as well into the conversation. Hi, Bijou. Good morning, and thanks a lot for joining in. What are the demand trends that you have seen so far in Q4 ahead of the summer season? And also, if you could give us your sense, which are the key categories that are doing well and expected to do well?
Well, I think overall, when I take into account all the categories, what we have seen is a very subdued growth in Q4. Now, whether this is because of absolute consumption, whether this is because of the consumer sentiment, and typically the stock market has a very critical role to play in terms of consumer sentiment, all of these have truly affected the way the business has actually turned out in this quarter so far. Some categories, obviously, like food and grocery, has remained steady, mid-single digits in terms of growth. The apparel industry is close to zero in terms of growth. The electronics industry, again, which is largely led by the introduction of new products, as well as the introduction of new occasions. So typically things like a World Cup football, IPL tends to drive some upgradation in terms of purchases, or new telephone Mobile phone launches also tend to do that. There hasn't been too much happening in this quarter so far, and I think that has kind of tempered the growth. So as far as the overall retail industry is concerned, we are seeing a relatively stable market, not much of a growth like we had seen earlier. So I think that's the larger RAI view on this.
Okay, so you spoke about two industries, electronics and apparel. Would you be able, in a position, Mr. Kurien, to talk about consumer durables? I mean, large appliances, etc.
Yeah, electronics also, includes consumer durables. And
Okay,
what we must see, yeah. So when we talk about it, and if you were to look at it segment by segment, the large three categories are televisions, mobile phones, and appliances. Now, televisions largely driven, as I mentioned earlier, by sporting occasions. Mobile phones largely driven by the introduction of new models, which are, really killer models. And then in terms of appliances, it's mostly through penetration and upgradation in households. The penetration and upgradation in households continues to happen. However, appliances as a part of the consumer durables market is a smaller part, while televisions and mobile phones tend to be much larger in terms of contributors. So while appliances have done relatively better, televisions and mobile phones have been slightly weaker in terms of growth, which is the reason why the category as a whole tends to be at maybe between 5 to 8% in terms of like-for-like growth.
Okay, got it. So some slowdown trends quite evident. And you're looking at mid-single same-store sales growth. This mid-single-digit growth has become quite synonymous with most things consumer. Mr. Kurien, if you could just expand on that point, this gradual slowdown in demand that we're seeing, how much is it a function of maybe tighter financing, lesser availability of just funds with households? And do you have reasons to believe that now with the RBI also easing, and obviously now we've got the income tax bonanza as well, do you have reasons to believe that FY26 could be substantially better?
Certainly, there's a lot of hope about the future. But more importantly, I think when we talked about household finance, the RBI has actually come down quite heavily on personal loans. A lot of personal loans were used to drive appliances purchase as well as some durables purchase. So that, to some extent, has affected because there is both secured and unsecured. So the EMI model continues to work well, whereas the non-EMI model is where there is a bit of a challenge. In terms of general consumer sentiment has been a bit damp. Two reasons. One is that even though you might not be heavily invested in the stock market, but a decline in the stock market tends to bring down the mood of consumers. That's one part of it. And the second part of it is that we've also been hearing some early signs of layoffs in the IT industry, etc. And that is another reason why there is a little bit of concern about job security. So when the future doesn't augur well, then what tends to happen is that the consumers tend to be a bit more conservative in terms of spending, not so willing to be able to open their wallets. So I think that's one part about it. As we go along, and if you were to look at the kind of savings that have happened, and that savings have happened largely in the lower tax brackets, which is up to 10 to 12 lakhs. But if you really look at, where a lot of India's income is, a lot of India's income is actually in the greater than 10 to 12 lakhs. So you do have a part of the middle class which gets covered by the tax savings, but a lot beyond the middle class who are actually drivers of categories like consumer durables still really don't have any tax savings, but for them, really, these tax incentives were not the big driver of purchase. So, the lower middle class, you might see a little bit of impact in terms of consumer appliances penetration levels and purchases. So that's our view. FY26 is expected to be better. a lot will depend on how the rural markets perform. A lot will depend on what happens in urban. So I think we're all looking forward with a lot of anticipation to FY26.
I mean, we can hope, right? That's certainly the case. 1st of April, by the way, those 1 lakh crores worth of tax breaks start to kick in. I mean, it'll show a few months to start to take shape. And maybe on the 9th of April, RBI will cut rates, and that'll be the beginning of a few rate cuts as well. So there are, at the margin, maybe things which are lined up. Mr. Premchand, if you can hear me, sir, you are, as you said, Hyderabad, Telangana, Andhra. I mean, these are all, that's one spot where, which is still, and Mr. Kurien mentioned about some IT layoffs, etc. The one industry which is doing extremely well is global capability centers, GCCs. And every day you hear about some GCC or the other setting up base or wanting to set up base, signing up with the government in that zone, in the markets that you operate in, and on which you're very heavily reliant. Does the underlying sort of consumer remain strong in those markets that you operate in, or is there any weakness there as well? Mr. Premchand. Mr. Premchand, can you hear me, sir? Okay, I think we don't have him. So a bit of a tricky, patchy line. I think we'll wrap up this discussion. Mr. Kurien, thank you very much for the insights. Both of you, by the way, spoke about stock market decline. The market's coming up. So maybe at the margin, that is also a factor which perhaps will work. And we'll see. Thank you for that. Thank you for those insights and appreciate your time here on CNBC-TV18.